Welcome to the third part of our Good Debt, Bad Debt video series, The True Cost of Credit. Consider on a case-by-case basis how credit can help or hurt you. Remember that credit cards make money off you with interest when you don't pay off your purchases every month. So if you can't afford a purchase and you put it on credit, you let your lenders make money off you when you could have been making interest for yourself. If you buy a $1,000 computer with your credit card at 18% APR and you make minimum payments of $30 a month, it'll take you nearly 4 years to pay it off, and you'll end up paying nearly $400 in interest. Find a lower rate consumer loan or save up instead. Some pros of buying with credit include protection. Buying something with a credit card could make it easier to get a refund if there's a problem with the item. Some cards even offer buyer's protection, a type of insurance that can protect you if an item is damaged or if something is wrongfully charged to your account. Credit cards can also come in handy in emergencies, like if your car breaks down. You also get quicker gratification. Credit allows you to buy and use an item while you're paying for it. They're also very convenient. It's easier and safer to have a credit card or get a loan than to carry large amounts of cash. Plus, you'll now have access to online purchases, and they're very handy when you travel. Using credit responsibly is the best way to build your credit history. When used shrewdly, making use of special offers can be used for your benefit. And rewards, such as points, frequent flyer miles, or rebates. Often these cards have higher interest rates that can offset the rewards. Also, don't justify taking on credit if you can't afford it just for the rewards. It'll never even out in your favor. Some potential cons of credit are interest. Paying to borrow automatically makes the items you purchase more expensive than if you had to pay for them with cash. And overspending. People often misuse credit to buy what they can't really afford. If you can't afford it now, then you definitely can't afford it in the future when it comes with interest too. Also, it can be harder to track how much you've spent when you swipe the plastic instead of handing over cash one bill at a time. Other cons of credit include debt. Lenders have legal claims against your assets and income should you fail to pay off your debts. And beware of identity theft. Each time you use your credit card, there's a potential for someone to steal and use your information without your permission. Protect your personal information from identity thieves at all times. If you're about to have a nice dinner out, do you normally stop at the bank and take out a high-interest loan first? Of course not. That's exactly what people do when they don't pay their entire credit card bill each month. You can be sure you'll be able to pay your entire bill when you use your budget to help you make purchasing decisions because you'll know the total you have to spend in advance. That way you don't have to make purchases with loans. And by only spending within your budget on your credit card and paying it off every month, that's how you make credit work for you, because you're building up your credit score, saving you what could be hundreds of thousands of dollars over your lifetime in good rates. This concludes part 3 of our Good Debt, Bad Debt video. Please continue by watching part 4, dealing with the realities of debt.